name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of LME 3-month copper and aluminium. I'll start with LME 3-month copper. The shooting star pattern 2 days ago, which I mentioned, was stymied yesterday, killed at birth if you will, by yesterday's indecisive doji cross pattern. I suppose it shouldn't be surprised, or I shouldn't be surprised by this. After all, I had pointed out how the market was embroiled within the trio of supports from 2011. That's the March high at 99.99, the April high at 99.47, and the June high at 99.07. All conspired to not only mess up the market, but really mess it up. What looked like a shooting star pattern, but didn't happen. I did mention yesterday that I was then unable to see if it was a type 1 bearish or type 2 bullish pattern. Anyway, as I also added yesterday, it seems this congestion zone of old supports currently capable of holding up the decline right now. Please note, apart from some mild congestion in the 98.56 area, we don't seemingly have any significant support below until the February high at 96.17. Now, so far today, well, the market seems to have gotten fed up with this congestion zone, or maybe even just with the failed shooting star pattern. I'm not even going to go into that. And has decided to try and venture higher, in which case we have only really the failed shooting star high at $10,086 before we start looking at the February 2011 high at 10,189. LME 3-month aluminium. Bullish engulfing pattern yesterday, as the possible bull hammer I speculated upon might have been created in the previous session, turning out to be a real bull hammer action. The market used the base of the May 2018 high at 23.74 to project itself higher through what was left of the old trend lines of the old ascending triangle pattern, currently 24.07 to 24.12. That actually started the recent move up in the first place back in February and late April, and eventually closing just over it. Now, as you may recall, over recent days I've raised the question in my mind and here as to whether the recent action since February might be a possible bearish bump and run reversal top. Now, I was open to the idea, but then we have had consecutive closes below the March uptrend, also known as the lower trend line of the previously mentioned old ascending triangle, and it seemed a little bit too bearish a response. There could be such a thing, but that's what I actually believe. Well, this move back up carries on raising doubts in my mind. It's not out of the picture, but this whole idea is actually edging its way. So far today, a slightly lower open and dip below what's left of the old ascending triangle before a move back up and significantly higher. This now brings last week's late high at 24.50 and the flatlining short moving average, currently 24.52, into the frame. And if this is really a rally worthy of the name, then it will have to tackle those two, as I cannot see a move higher happening unless those two are dealt with. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.